Happy Monday, everybody. I hope you had a great weekend. The sun came out here in Chicago, so we had a wet weekend, but here we are, and what a week ahead we've got. We'll get to that in just a minute. Today is April 8th, 2024, and this is your Monday market update. Last week was a down week in the stock market, so let's recap that. Then we'll try to get all of the upcoming market-moving events that are going on this week and still keep it at a reasonable time. I'm going to do my best, so I might talk a little fast. So last week we turned the page on the new quarter, so as we move into Q2, let's see how we do. Monday had stocks selling off as markets opened. Hot eco data was the reason, and as that brought treasury yields up, thus the headwind on stocks. The Dow was down about 2/3%, S&P down 1/4%, the Nasdaq up 1/10%. Selling pressure intensified on Tuesday, International Fact Checking Day. I have some thoughts on that, but that'll have to be one-on-one. You can call me on that. As I always say, don't let facts get in the way of a good story. For me, and certainly for these videos, back to the facts. Treasury yields moved back up near 2024 highs, and oil prices moved up on geopolitical tensions, especially in the Middle East. Fed heads did nothing to push things ahead. Eco data remained strong, so good news is bad news again. Jolts were as expected, and markets hit lows right around then when the jolts came out. Mester and Daly, the Fed heads, they held to 3 cuts, first in June narrative, but at the same time, they noted that it's a bigger risk to cut too soon. So just as you've heard me say for years now, the dot plot, just a possible plot. The Fed will pivot on the data. The markets, oddly enough, don't seem to get that. We'll see a lot this week. Not there yet. A few more days to recap. The Dow was down 1%, S&P down 0.75%, the Nasdaq was down just about 1%. Stocks did gap lower on Wednesday as more jobs numbers came out. Good news for workers. Eco data was pretty much Goldilocks, and Powell spoke, reiterating what he's been saying in his nice, calming tone. Markets ended in the middle of the day's range. The Dow was up 0.1%, S&P up 0.1%, and the Nasdaq was up 1/4%. Stocks did catch some buyers on Thursday as Goldilocks, eco data, and solid earnings calmed the troops a bit. Iran and fewer rate cut talks did see the air come out of the balloon by the end of the day. All back in the red. The Dow was down 1.33%, S&P was down 1.25%, and the Nasdaq was down almost 1.5%. And that was the setup for the big day, Jobs Day, and it was a big number, and the market reacted completely opposite as you'd expect. The headline number was hot, actually very hot, and revisions did little to change that. The details, much more important, and that's why the market did not sell off. Quite the opposite. Wage inflation is slowing, unemployment rate is down. So 2 points. 1, Powell said that he thinks we can still be okay with the strong labor market, thus why I told you last week I was less worried about this report. And 2, the numbers are not hot enough to change expectations for a June cut and 3 total in 2024. That is the conventional wisdom at this time. Add that to the fact that oil is back over 85. Investor sentiment is in the bullish 99th percentile. There are things still to fear, but markets had a strong relief rally. Not enough to turn the week positive, but a nice turn into the weekend. For the day, the Dow closed up almost 1%, S&P up 1%, 1.1%, and the Nasdaq up 1.25%. Now, you've heard me spout those numbers so many times. You know those are not blockbuster percentage numbers. For the week, the Dow had its worst week of the year so far, down 2.25%. The S&P was down just under 1%, and the Nasdaq was down just over 0.75%. And all that sets us up for this week, and what a week it'll be. You know that all that I'm about to tell you is all based on what it will do in the short term. It always does, but especially a full week like this. Top billing goes to the inflation numbers. Last month, CPI and PPI were hot. Tomorrow is CPI, and core CPI will be the one to watch. And of course, that won't be enough these days, so watch the super core. PPI is Wednesday. Today, we will get New York inflation expectation, and that's been watched lately. Tomorrow, small business optimism survey is out. Another interesting data point. Remember, we grow on the backs of our small businesses. We'll also see FOMC minutes on Wednesday, jobless claims on Thursday. Watch for continuing claims now. And Friday will be the University of Michigan survey, inflation outlooks, and consumer sentiment. And probably most importantly, the beauty pageant starts, earnings season. As always, we start with the banks. We'll get Citi, JP Morgan, Wells Fargo, State Street, and BlackRock. That will set the tone. Or will it? We will also get central bank action overseas during the week. Australia and ECB both expect to do nothing at this time, but what will they hint? And for those keeping score, the Fed heads are out. Goolsbee, Kashkari, Bowman, Williams, Collins, Bostic, and Daly. Bowman made what I think was the most off-the-path comment on Friday. She said that it is not her baseline, but there is a risk that they will have to increase the policy rate. Yes, raise rates should progress on inflation stall or reverse. That is a 180 from all the other comments. Just hedging, or are you testing the waters? We'll just have to decide. So that's it for today. Have a great week. We'll see you on Friday.